So MicroStrategy just got real. We need to talk about what that means for everyone who thought leverage was free money. Okay, here's what happened. MicroStrategy, the company that basically became a Bitcoin proxy for people who wanted Bitcoin but felt weird about actually buying Bitcoin, just collapsed from trading at 4 times its net asset value to 0.7 times. That's not a dip, that's a complete narrative flip. CTO Larsson flagged it. 6 broken support levels in a row. The stock that was supposed to be the safe way to get leveraged crypto exposure just became a cautionary tale about what happens when liquidity dries up. And while that was happening, the All In podcast takes on crypto and oligarchs went viral. I mean, genuinely viral. 7.46 times their median channel performance. People are clicking because they're scared. Because the daydream is over. Bitcoin right now is sitting at $60,094, up 0.22% in the last 24 hours. Looks fine. But look at the structure underneath. The fear and greed index is at 18, extreme fear, and that fear is getting priced into every leveraged position in crypto right now. Here's what most people don't understand about leverage in crypto. You're not just betting on the asset going up, you're betting that liquidity stays stable while it does. The second liquidity evaporates, leverage becomes a liquidation machine. And that's exactly what happened to MSTR holders. The company holds 815,000 Bitcoin, average cost $75,527. That's fine. That position is fine. But the stock itself was trading at a massive premium to that Bitcoin. People weren't buying MSTR because they wanted to own Bitcoin. They were buying it because they thought they could arbitrage the NAV spread and the leverage would compound their returns. It was a bet on perpetual liquidity. On the narrative not breaking, the narrative broke. When CTO Larsson pulled back the chart, he wasn't being dramatic. He was reading the structure. 6 candles below support, capitulation volume, the kind of price action that happens when everyone who was betting on a perpetual rally realizes it's not perpetual. And here's where it gets interesting. The retail money that bought MSTR wasn't doing it for diversification. They were doing it because they wanted leverage without the margin call risk. Except that's not how this works. When the underlying asset stays flat and the premium compresses, you lose the arbitrage, and you're left holding a stock at a higher cost basis than the Bitcoin it's supposed to represent. Dogecoin is down 1% today. Bitcoin's flat. But the narrative around safe crypto yield through leverage, that's dead. And it's taking retail positioning with it. The all-in guys have been talking about this, the rotation out of speculative crypto into actual productive assets. That's not new analysis, but it's getting reinforced every day now. MSTR was supposed to be the bridge between traditional finance and crypto. Instead, it became the clearest signal that leverage in low liquidity markets is a wealth transfer, not a wealth creation machine. And the worst part? Most of the MSTR buyers don't know how to read a chart. They bought because Twitter told them it was safe, because Elon was adjacent to it somehow, because the narrative felt inevitable. MSTR went from trading at nearly 4 times its net asset value to 0.7 times. That's not volatility. That's the repricing of narrative risk. And when retail figures out they overpaid by 3 times, the selling pressure gets worse, not better. This is the part of the cycle where over-levered positions don't just correct, they cascade. You get forced liquidations in one strategy, which creates pressure in related assets, which triggers margin calls in other positions, which spills over into the broader market. One dominant narrative breaks, and suddenly everyone's reassessing their entire risk structure. The people holding MSTR right now are stuck. The Bitcoin underneath is worth owning. The stock is not. So they're either going to hold and hope the premium compresses inward, or they're going to book the loss and move on. Either way, they're not buyers. And that absence of demand is its own signal. If you want the deeper picture on how leverage cycles break in crypto markets, I went into this in Follow the Money, link in the description. But the short version is this. When the narrative that justifies the leverage evaporates, the leverage eats itself, and MSTR just proved it. Drop a comment if you're holding any of this, or if you got out early, because the people who saw it coming are probably more interesting than the people who didn't. And if you want me to dig into how this cascades from here, hit subscribe. And speaking of things that don't move the way you'd expect, a cow just casually walked onto Highway 400 in Ontario and caused a traffic jam without needing a single social media post about it. Proof that you don't need leverage or a viral narrative to disrupt an entire system. Sometimes you just need to be in the wrong place at the wrong time. The cow got off. The highway didn't recover for hours. Okay, I'm out. Drop a comment if you want me to dig into any of this further. Take care.